Hello, everyone. A very warm welcome. Good morning. Welcome back to our marathon lectures, which we are taking for our corporate accounting subject. Now, today, another important chapter, as we have discussed it, and I have already given you a schedule of our marathon. So, today, we are going to do another important weighted chapter, which is cash flow statement. Okay. So, as like just to give a heads on, for people who have joined today only, I am Fatema Kagalwala and I have been teaching this corporate accounting, financial management, the practical subjects for over a period of 8 years now, all right. And trust me, I have done the basic understanding of that chapter, solving the basic sum to past exam questions at the time when I was giving my attempt, and it has helped me score more than the exemption marks. Okay, so I want you all also to apply the same strategy. That is why I have designed my notes in that manner. I have given you all a certain understanding of the basics in the form of theory. Then we solve our practical questions, and then flow in that flow only we will go to the past exam questions to understand what does the institute want from us. Okay. So past exam questions basically gives you confidence in solving those or attempting those type of questions when asked in. Okay. So they are important. Other practical questions which I have kept from my end, they are taken from the previous exams and from the module. So you will be able to get a proper you will be able to do this entire chapter at one go if you sit systematically today. Just listen to me. I have the notes with me. The notes will be available in the description link, so you can then later on, if you want, you can download it or you can even solve while I am explaining. But in solving, do not lose what I'm trying to say. So sit back, understand what I'm teaching when we will be solving it. And even if you have not touched cash flow statements until now, don't have to worry. I will be taking it from the basics. Okay, so we will be taking it from the basics and then ending the past example. So I hope I am audible and you all are able to see my screen. So for that, just to begin, start before that, I just want you all to give me a thumbs up or a hit on the like button so that I know you all are with me and it is good to go and begin the chapter. Hello everyone, welcome back to our corporate accounting marathon, wherein we are going to start with another important chapter, which is cash flow statement. Okay, so cash flow statement, why it is important? Because yes, it is important for the shareholders and stakeholders who are deeply invested in a company. Okay, for them, this statement is one of the four pillars of the financial statements. So now, whenever you see any, if you have ever seen a corporate financial results, you will see cash flow statement as a most important part of that particular annual accounts. Okay, so we have P&L, we have balance sheet, we have directors auditors report, but along with that, cash flow statement is the most important statement which helps the investors understand as to what and how much is the company doing in form of their management of their cash. Okay, payment or receivables of the cash. Now basically, what does this cash flow give you, like what has to be done in the cash flow statement? First thing, the applicability of cash flow statement is as per the accounting standards 3. Okay, so Company Act 2013 also says that cash flow statement is a part of first balance sheet. We have P&L, income statement, we have cash flow statement as a part of our financial results. Okay, so important terms to understand for cash and cash flow. Basically, in this chapter, we are going to see how much does the company do to have their cash coming in, what are the activities by which cash comes in, and what are the activities by which the cash goes out. Okay, this chapter is basically on these two important words, cash coming in and cash going out. Now, we all know that we prepare financial statements based on the accrual. Okay, so if I have done some services, or I have rent, or I have sold some goods, even if I have not got the money for that sale, okay, I have sold goods on credit, we put it in our accounting statement, we show it as a revenue. Okay, but when I'm talking only about cash, cash basically can be for various activities. I must have just taken some plant and machinery and cash has moved out. Or I have sold some plant and machinery which is not related to my operations and cash has been coming in. Because of which the profit shown in the P&L is not something which the investors or stakeholders are interested in. Investors wants to know that how is the activities managed with the help of keeping cash properly. Okay, because how liquid are you? Okay, the organization, how able are you to pay your liabilities? Something which is very important, and it has to be shown in the form of a statement. So now cash, basically there are three terms, important terms. See, cash is everything available as cash in hand and available as deposits in the bank, okay, in your bank account. Cash equivalents are those investments which can be sold immediately. They are short term. Okay, they are readily to be converted into cash in the market. So those are also known as cash equivalents. Okay, like treasury bills, commercial paper. So companies might have kept that extra cash in form of such investment which can be readily converted into money in no time, is also a part of the cash equivalents. Why we need to know this term? Because the cash flow statement has a particular method to be solved. It has a particular statement format, and in that format these terms are very important. So we are going to see how the cash inflows and how the cash outflows are happening of the cash and cash equivalent. Whatever will be the difference of inflow and outflow, we will say that will be the cash, net cash inflow, or it can be net cash outflow, depending. Obviously, if my outflow is more and my inflow is less, so it will be net cash outflow. And if my inflow is higher than my outflow, my net cash inflow I will get. Correct? But, okay. What is important? Classification. Okay, classification of cash flow statement is very important because this forms our statement. Okay, in our statement we have to follow accounting standard 3. So they want us to tell that how much is your cash flow from different activities. The most important activity is our operating activities. Okay, your principal activity for which you are running this business. Okay, related to your income and expenses statement, or all everything related to your operations. So in case of your operation activities, it is of those activities of the enterprise. It is not related to any investment and finance, etc. Okay. So operating activities will determine how much cash receipts and cash payments you are able to do and manage based on your operations of the company. Okay, this is one of the activity. Second activity is the investing related activity. Okay. Now investment is all related to assets. My operations is selling of goods. Say I'm selling mobile phone. Okay. This is my operations. Okay. I'm a manufacturer of, or say I'm a manufacturer of pen. Okay. I sell pen. Okay, so my product is pen. Everything related to that pen, from buying the raw materials, making the ink, putting the plastic, everything will be related to my operations. But for the purpose of doing this activity, if I'm buying any kind of an asset, I'm buying some plant, I'm buying some office, or I'm taking some office on rent. Okay, all that is relating to my assets. Okay, they will help me in operations for sure, but it has nothing to do with my operations, which is year to year basis. Okay, cash flow for year to year basis. So in that case, those activities are related to investing activities. So if I'm buying some asset, it will be a cash payment to acquire that asset. Okay, or disposal of the fixed asset, that is not related to my operations. I don't have the business of selling the plant and machinery. Okay, I am into other business, but selling of plant and machinery or acquiring any kind of shares, or any kind of doing any investment in other companies, shares, warrants, debt. Okay, you acquiring that share capital, that is again investment for a company. You are either cash received from disposal of your shares, warrants, you are selling those shares, again it is related to your company's investments. Okay, you are taking some kind of a loan, or you are paying off the loans, all that is related to your assets. It's related to your separate assets of the company. Okay, so this is a second important thing, that cash flow from investing activities is how much. And the last one is cash flow from financing activities. Okay, financing activities is all that relating to your equities and loans. Okay, equity and loans in the manner like what? You wanted to buy this asset. Okay, you wanted to buy a plant and machinery. Now that plant and machinery, you have taken capital from the public, and then you are going to invest in that. So equity share capital will increase. So you are doing this financial activity. Correct. You are going to pay dividend on that capital. Again, it is related to your finance cost of your capital. You have taken loan from the bank. Okay. Again, it is related to your financial activities. Right. Interest you are paying. So all that which are relating to your financial instruments. Okay, that will be known and gone into the financial activities, and we are going to get cash flow from these three separate activities, and then we will come to know whether it is an inflow or an outflow. Okay, so there is a way to show this uh, particular statement. Okay, there are two methods which we have to follow. One is the direct method and the other is the indirect method. Now from your exam point of view, both are important. They might just generally ask you, give you certain information and ask you find cash flow from either investing, financing and operating activities, or they might ask you full-fledged sum. Okay, and it can be of indirect method also. So understand one thing first. Okay, I'm just taking you all through the direct method because it is very simple. It is very easy to understand what all is happening in operations. Okay, when I'm talking about operations, Obviously, I must be receiving money from my customers. That is some cash inflow. Everything related to cash. Okay. Everything related to the operating activities and cash related activities in operations. Okay. So if my customers are paying me money, I will have that amount. If I go ahead and I pay my suppliers, I will subtract that amount. So I will get some cash generated from operation. Right? Simple. I had to collect money, so I got money in, and I had to pay some money. I have paid some money. I have got my cash from operation. From that, income tax we have to pay. There is no way that we can evade tax. Income tax has to be paid. I get cash flow before extraordinary items. If there is any. Extraordinary means because there was something which had happened, unusual thing, an unusual condition took place, because of which we got some money in. Because of there was a strike, or say there was an earthquake disaster settlement, etc. Only then any kind of an extraordinary item which may or may not be there, we have to just add that back. We get cash flow from operating activity. Okay. So here it is looking very simple. There are a lot of things which can be there in the operating activities. Okay. There can be changes in the closing stock. There can be changes in your outstanding expenses depending on the balance sheet they give. We will do a sum, only then you will understand this. Cash flow from investing activities. If I am purchasing a fixed asset, my cash is going to go out, obviously minus. Okay, if I am selling some asset, I am going to get the cash in, so it will be addition. Okay, I am receiving interest. Why? Because I have done investment in some other company in form of debenture or loan I have given to some company. So I am receiving interest. It is relating to my investment activity. It has nothing to do my operations. So I will add it. Dividend income I am receiving. I have invested in form of capital in another company and I am receiving dividend. Dividend we put it in P&L. Interest received also we put it in P&L. Profit from sale of the equipment also we put it in P&L. Everything goes in the profit and loss statement. But this particular statement tells me that from which activity I am getting that cash in, or for which activity that cash is moving out. Okay, so you can get cash from investment activities. And last one is a cash from financial activities. If you have raised capital in form of share capital, money is going to come in. If you are raising capital in form of loans or debentures, money is going to again come in. You might be paying your previous loans, money is going to go out. Interest you are paying. Why you are paying interest? Because you have taken loan. And dividend also you are paying because you have taken shares. Okay. So all this is relating to your financial activities. We will have to add all the three: cash flow from financial, from investment, and from operating activity. We will come to know whether there is an increase or decrease, cash coming in, inflow or outflow. In that we add the opening. That means this is your current year's cash flow, net cash flow, net. It can be in form of inflow, it can be in form of outflow. Okay. From that you add the opening cash and cash equivalent. Opening, okay, you are going to get your closing cash and cash equivalent. Alright. So this is just a direct method. This is how in case of direct method you are supposed to solve it. Just see whether cash is coming in or whether it is going out, and if it is yes, coming in, going out, which activity it is. Okay, so we are going to read a sum. We are going to classify which activity, and then we are going to understand whether it is coming in or it is moving out from the business. Okay, so this was direct method. In case of indirect method, I will come to this format later when we will solve a sum on indirect method. Now let us read one question. Something like this they will give you in the exams. There is this information available of exclusive limited as on 31st March 2005. Though they don't give you such full-fledged sum for direct method, they will give you only one activity. But we will do all the activities in this one sum. Okay, there are cash sales for the year rupees 10 lakhs and sales on account is rupees 12 lakhs. Just give me a minute. Okay. So there is a cash sales for the year 10 lakh rupees and sales on account is rupees 12 lakhs. Now cash sales means you're directly selling the goods on cash and on account means it is on credit. You will receive money later on, but there is a sales happening of rupees 12 lakhs. Then there is some payment you have done on accounts payable. Must have bought some inventory stocks, did a payment of 7,80,000. Then there was collection against accounts receivables. Some money came in due to the debtors who has paid you. 7,60,000. Rent you have paid in cash 2,20,000 and outstanding rent being 20,000. 4 lakh equity shares of rupees 10 each were issued for 48 lakhs. Equipment was purchased for 16,80,000. Dividend amounting to 10 lakhs was declared but not yet been paid. Rupees 4 lakhs dividend declared of the previous year were now paid. Equipment having a book value of 1,60,000 was sold for 2,40,000. The cash account has been increased by 37,20,000. We are supposed to show the cash flow statement using the direct method. Now before I move to the cash flow statement, just to bifurcate which activity will be belonging to each and every entry they have given. Cash sales, accounts on credit sale, everything related to operating activity. Accounts, we have made payments on account payables, again operating, right? Collections done on account receivables, operating activity. Rent paid, rent outstanding, these are all your year-to-year expenses related to your operations. Correct? Equity shares, financing. We have raised equity shares capital, right? We have done equipment purchase, investment activity. Dividend was there, but we have declared, but it is not paid. But dividend related activity will be obviously investment related activity. Sorry, financial related activity. 4 lakhs of dividend, again financial related activity. Equipment of a book value was sold. So now this is going to be your investment related activity, asset. And then they have given that the amount was increased to 37,20,000. Okay, now see this cash flow from operating activities. I am interested about cash. In case of direct method, we are interested about everything actually happening in cash. So I know my operating activities. There are 4 operating activities here. I have cash sales, amount paid to my creditors, collections done against receivables, and rent paid in cash. Okay, so these 4 things I am going to take into consideration. One is my cash sales, 10 lakh rupees. I paid to my suppliers, cash is going to go out, so put it in the bracket, 7,80,000. Okay. collection done against accounts receivable, cash is going to come in, and I have paid rent of 2,20,000 in cash. So cash is going to go out. Okay, so if you will do the net cash flow from operating activity, add the positive ones and then subtract the negative, you will get a proper answer. 7,60,000. Okay, just write it in the outer column. Everything related to cash only I am interested in my direct method. This is a direct method sum. Okay, direct method. Cash flow from operating activity. So if you will see, I did nothing about my credit sales. Nothing. I just took my cash sales. I did nothing about my outstanding rent. I just took the rent paid in cash. Simple. All the 4 operating activities are over. There is no operating activity in the sum now. Now moving to your investing activity, which is related to your assets and equipments. Okay, cash flow from investment activities. We have only 2 now. Equipment was purchased and then there was one equipment sold. Okay, so when I have purchased the equipment for cash, my cash is going to move out, will be negative. And when I am selling that equipment, I am going to get my cash coming in. How much? It was of book value 1,60,000, but how much cash is going to come in? 2,40,000. So I am going to just add that 2,40,000. But when I will do net cash flow from this investment activity, I am getting an outflow, negative 14,40,000. Obviously, because purchase of equipment is more than what I have sold, right? So we are done with the investment activity. Both investment activities done. My operational activity is also done. Now we are left with the financial activity. We have raised capital, 4 lakh shares. Okay, but the share capital is 48 lakhs rupees. We must have raised it in form of premium. So my share capital, okay, issue of shares is 48 lakhs for cash. Then there was a dividend which I have declared but I have not paid. Though it is related to my financial activity, but I have not yet paid. But dividend of previous year, which was 4 lakhs, I have paid now. Okay, dividend which was of previous year, I have paid now. So that is going to go in form of cash outflow. So 48 lakhs coming in and 4 lakhs moving out. So my net cash inflow from the financial activity is 44 lakhs. They have already given me net increase and decrease in the cash and cash equivalent because they have given me the answer. So calculate and see whether 44 lakhs plus 7,60,000. Okay, 2 positives I am adding. And then subtract 14,40,000. See, you are going to get 37,20,000. Right? Got it? Okay. So direct method, understand one thing, that in direct method all the 3 activities bifurcate. Whatever is happening in cash we are going to take into consideration. Okay. So this was for you all just a simple sum for you all to understand how does a cash flow statement look like. So in case they happen to ask you direct method, simple, do cash flow from operating, from investing and from financing. You will get the net increase or decrease in the cash and cash equivalent. Okay, if there is any opening cash and cash equivalent given, add it and you will get the closing. In this sum they have not given me anything. So my closing is the same, like net increase and decrease. Okay. Now let us read another question. Madhuri Limited gives you the following information for the year ended 31st March 2006. Sales for the year total 96 lakhs. Company sells goods for cash only. Okay. Now they are saying this is going to be operating activity, right? Cost of goods sold was 60% of sales. Closing inventory was higher than the opening inventory by 43,000. Again operating activity, again operating activity. Trade creditors on 31st March 2006 exceeded to those on 31st March 2005 by 23,000. Again, this is related to your operating activity. Okay. Tax paid amounted to 7 lakhs. Again, operations related only tax. Depreciation on this fixed assets for the year was rupees 3,15,000, whereas other expenses totaled to be 21,45,000. This is also operating related expenses. Outstanding expenses as on 31st March 2005 and 31st March 2006, opening and closing, total to 82,000 and 91,000 respectively. Again, this is relating to your operation. New machinery and furniture costing 10,27,000 in all were purchased. New machinery will be investment relating to asset. A right issue was made for 50,000 equity shares of rupees 10 each at a premium of rupees 3 per share. Entire money was received on applications. Financial activity. Dividend of 4 lakhs was distributed. Financial activity. Cash in hand and at bank, that is your cash and cash equivalent, at 31st March total to 2,13,800. 31st March total means opening. Okay, there is 2 years involved, 2005 and 2006. So 2005 is going to become my opening. Previous year is current year's opening and this year's is closing. Right, so all this is related to my opening and closing. This time they have given me. It is very easy, nothing. There is nothing to worry about. Okay, let's see. Cash flow from operating activities. They are telling me all my sales are in cash only, directly. Okay, so this entire 96 lakhs is going to be cash coming in because of sales, positive. Okay, now they have given me the cost of goods sold directly. Cost of goods sold is basically what? You do opening plus purchases minus your closing stock, materials consumed, use, etc. All that cost which was involved in generating this sales is already given to you. So you will directly subtract this cost of goods sold, which is how much? They are saying it is 60% of the sales. Directly variable, directly related. So you will subtract 57 lakh 60,000. Now, closing inventory was higher than the opening inventory by 43,000. Just think one thing, that if you are having more stock in your godown at the end of the year, that means that much of your cash flow is blocked. If you would have sold that, okay, your closing stock is more. Basically, they are saying what? Closing stock is more by 43,000. That means your cash flow has got blocked by this 43,000. You have not sold it. So you have not got inside the cash. That means the cash has gone out, like, because you have purchased it, no? Then only it is there in your inventory. You must have purchased this particular stock and you have not sold it also. Therefore, it is in the negative 43,000. Next is, because they have given this opening closing, we have to take care. Trade creditors on 31st of March was exceeded to those on 31st March 2005 by 23,000. So when your creditors have increased by 23,000, there is increase in the creditors for the current year. Increase. That means your cash flow has not gone out. You must have purchased some more inventory. There is no money going out because we have taken cost of goods sold over here. Okay, and the other things are given to us in the form of opening and closing. We will have to analyze that how much cash has got blocked in coming in or going out. So if my creditors have been increased, that means cash is staying with me. I have not taken it out from my pocket. If creditors have increased, cash is with me. Therefore, I will add it. right? Taxes are paid, we have to pay the tax, subtract, simple. Outstanding expenses. Okay, there is something, where is it? Here, outstanding expenses as on 31st March and 31st March 2005, it was 82 and then it became 91,000. Okay, 82,000 and 91,000. So my outstanding expenses have also increased. Outstanding expenses increased means what? They are outstanding first thing in nature. I have to pay. I have not yet paid. Increased means what? Not paid. So to that extent, I am holding the cash with me. That is 9,000 rupees. To that extent, from that opening and closing, 91 minus 82,000. Right? Closing minus opening, 91,000 to 82,000. How much is the cash flow? The increase in the outstanding expense, 9,000. So to that extent, my cash is not moving out. So I'm going to put it as a positive. Outstanding expenses increase. Creditors, see, even the creditors has got the same effect. Since there is an increase in the creditors, I will put a addition sign to my cash flow. Why addition? Because to that extent that money is staying with me, not moved out. Otherwise, I would have had to pay. Even for the closing stock. Now in closing stock being my current asset, if it is staying with me more, that means I am blocking the money. Money is not coming in. So to the extent of 43,000, it is considered as money gone out. You must have purchased this stock, right? And the last one is your operating expenses. Now in case of operating expenses, they have given you depreciation on fixed assets of 3,15,000. Whereas the other expenses total to 21,45,000. These other expenses here, other operating expenses. We will not take depreciation. Why? Depreciation is a non-cash expense. Is a non-cash expense. So depreciation is not taken into consideration. Any kind of provisions, depreciation which does not actually have any cash movement out. Depreciation is just to show as an expense in your P&L. Provision for tax just to show as an expense in your P&L. Okay, so all that is not related to your cash moving out. Therefore, I am not going to take it into consideration. Operating expenses, subtract. Now, when you will do the total, first do all the positives and then subtract the negatives. Okay, so 96 lakhs plus 23,000 plus 9,000. I think something like 96 lakhs 32,000 you will get. From there, now minus 57 lakh 60 minus 43,000 minus 7 lakhs minus 21 lakh 45. 9,84,000 you will definitely get it. Net cash inflow from your operating activities. Okay. So all the operating activities are done. 1, 2, 3, 4, 5, 6. Okay. Now the seventh one is your investment related. You have purchased some furniture. If you have purchased, cash will go out of the business. So purchase of furniture, you will show it in the negative sign, 10,27,500. Anything else related to investment? Nothing. Only one entry was there. And the last one is cash relating, cash flow from the financial activities. There are two things. One was dividend and one was right issue. For right issues, they are saying 50,000 equity shares of rupees 10 each. Premium is 3 rupees per share. So obviously, I will take 50,000 into 13 rupees. No, I'll get 50,000 into 13. 6,50,000 will be my cash coming in because of this right issue. And dividend paid is 4 lakhs distributed to the shareholders. That will be my cash going out. So my cash inflow from financial activities is going to be 2,50,000. Now there is positive 2,50,000. There is positive 9,84,000. Add them both. 2,50,000 plus 9,84,000. And then subtract 10,27,500. You will get net increase or decrease in cash and cash equivalent. This will be your net increase or decrease. There is an increase, 2,06,500. Add back the opening. They have given you the opening, 2,13,800. We will add the opening to the current year's increase and decrease. We will arrive at the closing cash and cash equivalent, which is 4,20,300. Okay, everybody? Understood? Cash flow. This was also a part of your direct method, but it was a little different. Why? Because they had given us the financials of 2 years, opening and closing, with the help of which we had to ascertain whether the operating activities there is an increase or decrease. Generally, even in your past exam questions, if you'll see, they will give you financials for 2 years, and based on that, you'll have to compare to see whether there is an increase or decrease. Okay. Now I am coming back to my theory which I had given to you all. Just to make you all understand, now you will be able to get it. So we did cash flow from financing activities, did it from investment. We also did it from operating activities, right? Direct method. So see, there are certain examples. Cash sales of goods and services, cash collected from the debtors, cash receipts on interest or dividend. Now, why will this come over here? Interest and dividend is relating to your investment and financial activities, no? If you have received interest or you have received dividend and you're putting in the operations, that can happen when you are into the business of investments. Okay, so this is something different. I will explain you again. Cash received from royalty, fees, commission, these are your revenues paid to your suppliers. You're paying rent rates, wages, income tax, all this is your operating related activity. There are some formulas how to find some cash collected from debtors if they have given you opening, closing and all that. So you have opening balance of the debtors, you have got the closing balance of the debtors, right? Opening plus credit sales minus closing balance, that will give you the balance, will be balancing figure will be the money coming in. Even if you will make the ledger of the debtors, you will write to balance, opening, by balance, closing. Okay, you have done some purchase, so debtors have increased, okay, to sales. So whatever will be the balancing figure means, that means you have got the money na, in your bank account by bank. Right, so this will be the money coming inside. Same thing for suppliers. Opening balance of creditors plus whatever credit purchase you have done minus your closing creditors will get you cash paid to suppliers. Payment to employees, opening outstanding salary plus your current year's salary minus closing. And then interest paid out, opening outstanding interest plus interest for the current year minus closing. Insurance, same, opening. Insurance is always prepaid. So insurance expenses for the current year plus closing minus you will do your prepaid. Only this is different because insurance premium is always paid in advance. So closing plus your current year's minus opening will give you your insurance premium paid. Okay. Now there is this one table I want to see. Okay. Interest and dividend. What does interest and dividend? It depends upon the nature of the enterprise. Okay, it depends upon the nature of the enterprise, how you will treat this interest and dividend. Right now we did two questions. We did dividend in the financial activity only, right? In both the sums. Say if this enterprise, they are telling you it is a financial enterprise. Okay, financial enterprise means what? They are dealing only into shares and debentures, etc. They are dealing only into this financial instrument. Okay, so cash flow arising from interest paid and interest and dividends received have to be classified as their operating activity because it's a business. Okay, that will be their operating activity. So if they are paying interest, okay, or they are kind of receiving interest paid and interest and dividends which they are receiving is going to be classified as their operating activity. Okay, however, dividend paid will be classified as financing activity because they will pay dividend only if they have raised capital. No, if they have raised capital, they have shareholders, only then they will pay dividend. So receiving payment of dividend, whatever it is, payment of dividend which they are doing, only that will be classified as under financial activities. But otherwise, receipt of dividend, receipt of interest, or payment of interest will be classified as an operating activity if it is a enterprise which is a financial enterprise in nature. For all the other enterprises, interest paid should be classified as cash flow from financing. Interest paid. Yeah, because you must have taken loan and you're paying interest. Financial activity. Cash flow arising from interest and dividend should be classified as your investment activities when it is in case of your when you are into financially dealing into financial scripts. Okay, all this is your financial business. Dividend space should be classified as cash flow from the financing activities. See this. Financial enterprise and other enterprise. You are paying interest. If you are paying interest and you are into financial enterprise itself, obviously this is related to your operations. You are receiving interest. Okay, and you are a financial enterprise. Obviously this is related to your operations. You are also receiving dividend. You are a financial enterprise. It is related to your operation. Okay, but dividend paid will be related to your financial activity. For any other enterprise, if you are paying interest and if you are paying dividend, it is related to your finance. But if you are receiving interest and receiving dividend, that means you must have done some investment in another company. That is why it is related to investment activities. So this table is important. Even if you don't read anything else above, just keep in mind, if they have mentioned financial enterprise, then take into consideration that interest paid, interest received and dividend also received. These three will come in the operating activities. Okay, interest paid received, dividend paid received. There are four elements. Okay, interest paid, interest received, dividend paid, dividend received. If it is a financial activity, except dividend paid, everything will be into operations. But if it is in any other enterprise, interest paid and dividend paid will be financial activity. Interest received and dividend received will be due to your investment related activities in another organization. Right? Here. Now, I am coming to your indirect method. Okay. Before we solve a sum, I am taking you all through the format of indirect method. Now, in case of indirect method, only cash flow from operating activities, only this format changes. Cash flow from investment and finance remains the same like what we did in the direct method, no change at all. But in case of indirect method, only operating activities, now we will have to change it. Why change it? Because in this type of sums, no, they will kind of give you net profit. They will not give you your sales figure and all that. They will give you the balance sheet. From that balance sheet, you are supposed to take the profit amount, and in that profit, now you will have to make the adjustment. That this profit is appearing in the P&L. What all we must have done in order to arrive at that profit. Okay. So when you take profit before tax and extraordinary items, we will have to do adjustments for those things which are non-cash in nature, because in P&L we put all this depreciation, we debit amortization, all that we debit, and then we arrive at the net profit. So now with this net profit which we have already arrived, I will have to do all the adjustments. Non-cash expenses, I have to add it back. Anything related to financial activity, if I have already put, I will have to add or subtract it. Like profit on sale of investment or profit on sale of fixed asset. interest or dividend, whatever I have done relating to financial activities, okay, that all again I have to add back or subtract in order to arrive at a profit for operational related activity. So then I will get operating profit before working capital changes. Now working capital relates to current assets and current liabilities. So any changes happening in the current assets and current liabilities, that will affect my working capital. So if there is increase in my assets, if my assets have increased, obviously it is understood I have paid and I have bought some asset. Right? Assets increasing, money is kind of going out. If there is a decrease in my current assets, that means money must have come in. If there is increase in my current liabilities, that means I have not paid cash. And if there is decrease in my current liabilities, means I have paid to my creditors. Think in that way. Then you will less your tax, any extraordinary items, if there is any, you less it, you get net cash flow from operating. Investment and financial activities remain the same. What all we have to do in case of indirect method for cash flow from operating? We take the net profit. In that net profit, we do all the adjustments to be done. Say adding back of depreciation, adding back any provisions, adding back anything which was relating to finance, adding back everything relating to investment. We will add all that back, add or less, whatever depends on what is the situation. And then we will, through that profit, we will do working capital changes and then arrive at net profit from operating activity. Okay. For this, we will read a given question. Balance sheet of X Limited as on 31st March 2010 and 2011 was as follows. When in your exams, you all will find this type of sums on. I will give you 2 years balance sheet. So this will become your opening. Previous year. This will become your current year closing. Okay. We have share capital from 5 lakhs, this 7 lakhs, general reserve 50, 70. Profit and loss, it was 1 lakh, now it is 1 lakh. Sundry creditors was 1 lakh 53, now we are standing at 1 lakh 90. Bills payable from 40, now we are standing at 50. Outstanding expenses from 7, it has reduced to 5. In case of asset side, land and building from 80, we have got 1 lakh 20. Plant and machinery from 5 lakhs to 8 lakhs. Stock 1 lakh to 75. Sundry debtors from 1 lakh 50 we reached to 1 lakh 60. Cash is 20 and 20. Opening 20, close also 20. Additional information. 50,000 depreciation was charged to the plant and machinery in the year 2011. A piece of machinery costing 12,000. Depreciation provided thereon was 7. Was sold at 60% of profit on the book value. You are required to prepare the cash flow statement. Now, whenever these type of sums are there, okay, working capital related, we will take it in the working capital changes, right? Working capital is your current assets and current liability. So, current assets, working capital, sundry creditors, bills payables, working capital, outstanding expenses, working capital. Stock, working capital, sundry debtors, working capital. Cash, so we will take in cash and cash equivalent, right? So, we have 5 items of working capital changes, right? I'm just putting it in the balance sheet for you all to understand the bifurcation. Okay. Anything relating to my share capital will be what? Financial activities. Right? Anything related to my share capital, financial activity. Anything related to my fixed assets be what? Investment activity. Right? General reserve, profit and loss account are everything which will come when I will put money in my general reserve. When I have balance left, no, from my profit. After finishing all the expenses, I have some profit left. That profit I will appropriate, no. I will put some in general reserve. I will put I'll pay some dividend out of it, or I will do some kind of a thing from that profit. So PNL and general reserve is something which we will have to understand. Okay, with the help of which we will be able to find the profit. Now they have given me 2 adjustments related to plant and machinery. Okay, one is about its depreciation and one adjustment that machinery was also sold. All the adjustments which they give, we will take that in the form of working note. Okay. There are two adjustments. I have passed two journal entry, working notes, journal entry and ledgers. It is very important for us to make ledgers when this type of summaries are. Okay, first journal entry. Depreciation charge to plant and machinery, simple journal entry. Depreciation account debit to plant and machinery, 1000. And there is one machinery which I have sold. Whenever I will sell a machinery, I will get money, no? I will get money, cash or bank. I will get that money. And what will go out? That machinery will go out. And profit or loss on the sale of machinery, then we will get. So see this. There was a machinery costing rupees 12,000 and depreciation on that was 7. So cost 12 minus depreciation, so its written down value is 5,000. It was sold at a profit of 60% on the book value. What is the book value? 12,000, na? Costing. 60% above if I am selling, that means I am making a profit only of 7,200. So how much money must I have got? 12,200, no? I got 5,000 plus I got this 7,200. I have sold that machinery at 60% above the cost. So cost was 12,000 rupees. I have sold it 60% above. That means my profit is 7,200. So how much money I got in selling? Sold. Okay, this is the amount of money I got, cash coming in due to the sale. This is the money coming in, 12,200. Plant and machinery, I will write it at the written down value only, no? And what is the profit on sale? P&L, it will go 7,200 rupees. Because this is a profit. Profit on sale of P&L, also we put it in the P&L only. Plant and machinery written down value, how much machinery is actually going out? 5,000 only. But how much money I received is on my cost, 60% above, I got it on sales. Okay, so 12,000 plus 60% if you will do 7,200 is the amount you got as a profit. Okay, so now these two journal entries are there. I will make the ledgers. Simple, I will make plant and machinery ledger and I am going to make my P&L appropriation ledger. Why? Because P&L appropriation if I will not make, I will not be able to find my profit amount. Plant and machinery, debit side, credit side. Rest all is very easy. So in case of plant and machinery, opening will be 5 lakhs, closing will be 8 lakhs. So 2 balance brought down opening, 5 balance carried forward closing. Right? Now I have a journal entry. Depreciation account debit to plant and machinery. So this depreciation will go, na? One, so I will have to add it back to the operating activities, non-cash expense. And one I will put it in the plant and machinery account credit side. So by depreciation 50,000. Right? Then there is one more journal entry. I got some money, no, due to the sale of this plant. So how much plant has gone out will go, no, in the ledger. Right? It will go on the credit side. By bank, I received money on that. Correct? So opening, closing and all this journal entry when I will pass, I'm getting a credit balance. That means I have purchased more machine. 5,000 plus 50,000 plus 8 lakhs. 8 lakh 55, 8 lakh 50. There is a credit balance. That means there is a purchase of machinery happened. Purchase to the extent of 3,55,000. Okay, so this purchases will go in what? Investment activity now. Right, so my plant and machinery, I am done. Because there was depreciation, I had to pass the journal entries and make the ledger. Rest all the items, I can just compare the amounts and see whether there is an increase. Here if I would have tried to see that there is an increase in 3 lakhs, of plant and machinery, I would have been wrong because there is adjustments to that. There was certain plant and machinery being sold also, and there was a depreciation which we had to charge. So now I need to know the net cash investment done in my plant and machinery. There was opening, closing, understood. And then there was depreciation which I had to charge. There was some plant's WDV value, the extent of which has been gone from my plant and machinery's ledger. Okay. So, two purchases will be how much? There is nothing here. Purchases of the balancing figure 3,55,000. This they can ask you as a separate question for 3 marks. Now I need to find my NPBT. They have given me my P&L account. Simple. Profit and loss, they have already given me 1,60,000 and 1,00,000. So I will start by balance brought down. Opening 1,00,000 and to balance carried forward 1,60,000. Okay. Then, okay, there is a transfer to general reserve. See this. From 50, my general reserve became 70. Now, transfers also will happen from my P&L appropriation only, no? Whatever profit I have, okay, after tax, from there I will do appropriation, means what? Allocating that profit to different reserves or provisions, etc. So that means this transfer to general reserve also has happened from here only. 20,000 rupees, the change. This is also done general reserve and P&L. Okay, so my NPBT is now 80,000 rupees. I'll have to start the sum with the net profit before tax, do the adjustments on that, and then arrive at cash flow from operating activity. Now see this, taking this 80,000 the sum. Net profit before tax 80,000. Any financial related or investment related activities I will add back or subtract. Okay, is there any interest related? Nothing is there. Okay, there is nothing, dash. Add back interest. Add back interest received. Add back any depreciation. Yes, we have provided depreciation 50,000. Add it back. Okay, any kind of written off or any kind of a provisions also we added back. Is there anything? There is nothing. I put a dash. Add non-operating expenses. Is there any non-operating expenses? There is nothing. Is there any non-operating income? Yes. We had put that profit of 7,200. It is non-operational. There is a profit of 7,200 which we had put it in our P&L. No? So my profit has to be now reduced because it is non-operational in nature. So subtract 7,200. You will get cash flow from operating activities before working capital changes. Okay. This is your non-operating activity, this 7,200. Okay, this cash and cash equivalent, one entry has gone in the plant and machinery account. Okay, one effect will go in what? Your profit, no, in your P&L. So 1,22,800. So all this is done. Now I will do my working capital change. Working capital changes, you have to just compare whether there is increase or whether there is a decrease. Okay, so starting with the creditors. Creditors have increased 1,90,000, has become from 1,57,000. There is an increase in working capital, so I will add back. Increase in liability. I must have made more purchases. I have not paid. So increase, add back. Increase in bills payables by 10,000, again add back. Okay, so whenever there is an increase in the liability, I will add it back. 10,000 added back. Bills payable, outstanding expenses was 7 and now it has become 5. That means I must have paid, no? Only then my outstanding expenses has decreased, na? So if there is a decrease in the liability, I will subtract. Money has gone out. Now there are two assets, current assets, stock and sundry debtors. Stock has reduced by 25. That means I must have sold it. I must have got cash because of that. So add it back. Decrease in the asset, I'm going to add it back. Increase in the asset, I'll have to subtract. Now increase in the debtors. Debtors was 1,50,000 and now it has become 1,60,000. That means I'm not able to get that money from the debtors. There is still this additional 10,000 blocked in form of cash, right? So I'm going to now subtract it. So if there is an increase in the current assets, I will subtract. Okay, if there is an increase. If there is a decrease in the current assets, I will add. If there is an increase in the current liability, I will add. And if there is a decrease in the current liabilities, basic logic you have to apply. So now from 1,22,800, first add all the positives plus 37,000 plus 10,000 plus 25,000. Then subtract 10,000 and subtract 2,000. You will get 1,82,800 operating profit after working capital changes. Okay. Tax paid related, any entries there here? No. There's nothing. They've not given me. So I'm putting dash minus tax paid dash. 1,82,800. Now I am left with investment and financial activities. We have already mentioned what is investment activities for us. Land and building and plant and machinery. Land and building we have already calculated, purchase of land and sale of land. See, this purchase of land from 80, it has become 1,20,000. Okay, so basically 40,000 I have purchased it only. Na? If I have purchased it, my money is going out. So negative 40,000. In case of plant, I have made the ledger. So I will go and see my ledger only. In sale of plant, I have received money, 12,200. That will come as sale of plant, positive. And my ledger shows me that I have made more purchases of plant, which amounts to 3,55,000. If I am purchasing, it will be in the negative sign. It is going out. So add 3,55,000 plus 42 negatives you add and then subtract 12,200. You will get 3,82,800. Put it in the negative sign. That is a net cash outflow. Because of investment activity. And last one is your financial activities. Only one financial activity is the share capital. From 5 lakhs it has become to 7 lakhs. Means what? You have issued shares, got money in the account. Issue of shares by 2 lakh rupees. So this is cash inflow. 2 lakhs inflow and 1,82,800 inflow. 3,82,800 is the inflow minus 3,82,800. You have to do all the three, no? A, B and C addition. This one you have to add. This is the 2 you have to add. And 3 you have to add. Right? That is 1 plus 2 plus 3 you will do. And you will get nil. Positive and negative same number. Is there any opening cash and cash equivalent? Yes, they have given me. Cash opening 20,000. Add that back to the nil. You will get closing 20. See, closing is also 20, no change. Opening also we started at 20, closing also at 20. We have verified this sum. Clear? Understood? Okay, so cash flow statements, try to focus on your practical questions only. They are not going to ask you anything related to the theory in cash flow. Okay, now coming to your past exam questions. Your past exam questions are pretty simple than what we have done. See this. They have given me capital structure of Sangam. Okay, they are saying there is share capital. Shares are of rupees 10 each, 5,000 crores. Secured loans 4,000 crores and unsecured loans is 2,500 crores. In the next year, the company is planning to expand the project and they need 1500 crores. The project will be financed at 40% with fresh owners capital and 60% they will take a debt. And the old debts is not repaid also during the year. Equity capital will be raised at rupees 15 per share and average interest on the debt, your old debt plus your new debt, will now become 13%. Your tax rate is 25%. You are supposed to show the forecast of cash flow from financial activities. So easy, everything related to financial activities only they are given. Share capital, secured loans, unsecured loan, everything is relating to your finance. Okay, so let's see. Just give me a second. Okay. So this is your December 24 attempt sum. Okay. Capital structure of Sangam Limit. Now what I am writing is, they want us to find cash flow from financing activity. Okay, particulars amount, rupees in crores. Okay. First I will do the working note for you all. Now you see this breakup. Okay. We have to first understand the requirement of Sangam. They are saying Sangam is going to require 1500 crore rupees. Now that 1500 crore, they will take 40% in form of equity and 60% they will take in form of debt. Understood? So if they are taking 40% in equity, that means 600 crores in form of equity, and 60%, that means 900 in form of debt. So if I am taking 600 crores in form of equity and my value of the share, they are saying, has to be raised at rupees 15 per share. Right? So 1600 crores is the amount divided by the issue price. So how many shares am I raising? 40 shares of rupees 10 each. 40 crore shares of rupees 10 each. 40 crore shares of rupees 10 each. Why 10 each? Because that is the face value. And 5 rupees is the premium. So 40 crores will be what? 400 crores. 40 into 10. Right? Face value into number of shares. And here number of shares into the security premium. Security premium is 5 rupees. So this will be 200. So 400 and 200. Right? Next is your interest cost. Interest is important. You have secured loans, you have unsecured loans, 4,000 and 2,500. Again, we are doing a debt 900 crores. Okay, so now total debt will be how much? This is already their previous given. Unsecured is also previous already given. This is new. So when I do the total, they are saying average of this total, we will be paying 13% of average rate of interest on old plus new debt. So if I am paying 13%, that means I am paying 13% on how much? 7,400. This will be my interest. 962 crores will be my interest amount. It is important, no, for my financial related activity. Interest paid. So now I can find out what is my cash flow from finance related activities. First one is issue of shares. The share capital which I have raised, I got it in form of capital 400 crores and in form of share premium 200. So total became 600. There is new secured debt raised. They have told me 900 CR. Correct? And then there was a debt interest which I have paid, which is 962 crores. So cash flow from the financial activity 538 crores. Right? Cash flow from the financial activity. This was already there previously. Okay, now they are telling me to find the cash flow from the financial activities, forecasted cash flow because of this particular raising of the capital of 1500 crores. Now what will happen? From 1500, 600 I am raising in form of shares. So that I have mentioned, share premium also and share capital separately. 400 and 200 becomes 600. I am raising new debt also of 900 crores. And on that interest also I will have to pay. Interest will be going out. This is going to come in. Cash flow coming in due to the financial activities, and this is cash outflow. Okay, so 900 plus 600 plus minus 960. From 1500 I will minus to get 538. Could have done directly also, but it is for 5 marks. We have to show some kind of a format, some working note to the institute that we have solved this. Okay, clear? Understood? Now the next question. The summarized information of CBA Limited is given. That is the 31st April 2022 and 31st March 2023. So opening and closing balance sheet. Share capital from 9 lakhs, it has become 10 lakh 50,000. Share premium is 90,000. General reserve has also increased. PNL from 90 to lakh 42 400. Debentures was not there, now it has come. Okay. Sundry creditors has increased. Provision for tax has increased. Proposed dividend has also increased. In the asset side, land and building, plant and machinery, furniture has increased. Stock has increased. Sundry debtors increased. Bank balance has increased. Everything. Now depreciation during the year was for land and building 1 lakh 80, plant and machine 1 lakh 50, and for furniture it was 3,600. Debentures were issued on 1st of October 2022. We are supposed to prepare the cash flow statement of CBA Limited for this financial year. So only adjustment required is for the depreciation. Okay, basically. Only depreciation related is what is there. So this sum I have solved it currently like this. First, okay. You see a profit and loss account from 90,000 it has become 2,42,400. 2,42,400. I subtract 90. I'm going to get 1,52,400. Net profit before tax, PNL difference I have just. Okay. Now I'm going to do the adjustments. Okay. Add back all the expenses which are not supposed to be taken for operation. Add back or subtract. Depreciation, non-cash expenses, I'll have to add it back. Okay, because I'm doing a reverse treatment. No, this is net profit before tax. I did the PNL difference and took it here. Now I have to do the adjustments of financial activities, investment activities, any provisions, transfers, depreciation, everything I'll have to do here. So depreciation I will add back non-cash related. So add it back. All the three depreciations I have already given 1 lakh 80, 1 lakh 50 and 3,600. So here 1 lakh 80,000, 1 lakh 50,000, 3,600, 3 lakh 33,000, 100 depreciation I've added, right? Now see this general reserve we had done in our previous sum also. General reserve has increased. 1,95,000 has become from 1,35,000. That means this 60,000 in general reserve I must have put due to by provision P&L appropriation. Add that back. Any transfers I will have to add it back. There is an interest factor also involved in case of debentures. This is 2,10,000 issued on 1st of October. My balance sheet is as on 31st of March. So how much months debenture interest I can take? Only 6 months. 6 months debenture interest I can take. So on my 2,10,000, 10%, okay, is 221,000 divided by 2. 10,500 will be my 6 months interest on debentures. This is my financial related activity. It has gone in the profit and loss statement. It has reduced my profit. I'm going to add it back. Interest on debentures for 6 months, 10,500. Any provision for tax, any proposed dividend, they are not paid. They are provision. They have been removed from the P&L appropriation account. Okay. So any provision for tax, now they have not given me anything related to provision. So the opening one, okay, the previous year will be the tax paid and current years will always be provided. Previous year I'll pay and current years I am providing. I am not paid. So provision for tax I am going to add back for the current year. Proposed dividend also same thing. Previous years gets paid, current years gets provided. Okay, so 1,05,000 also added back. So all the adjustments which were required, anything else is there? Nothing. Right, land and building, plant and machinery, furniture. For land and building, plant and machinery and furniture, there is depreciation only. This is again working capital, stock, debtors, working capital, sundry creditors, working capital. This we have already completed. Okay, the one which will be paid, we will take it, no? Tax paid. Proposed dividend is your financial activity. Right? This also we removed it. We'll have to put it in the financial activity. General reserve is done. P&L is done. Share premium and equity share capital again related to your financial activity. Right? So, cash flow before working capital changes. Everything in addition only. From your 1,52,400, you have to add back everything. 1,52,400 plus 3,33,100 plus 6 plus 10,500 plus 1 lakh and plus 10, 1,05,000. 7,83,000 you're getting. Now I will do my working capital changes, increase or decrease in the current assets and current liability. If there is an increase in the liability, I am going to add it. If there is a decrease in the asset, I am going to add it. But if there is an decrease in the liability, I will subtract, and increase in the asset also I will subtract. Basically based on this is the common treatment which we do now. So see this creditors have increased. That means I am holding on to cash. Liability is increasing, right? So this is going to be positive. Increase in the creditors, add. How much I'll add the difference? 1,72,100. 1,000. 17,100. Right? So creditors is done. Stock is increasing. If stock is increasing means I have not made the sales. That much of amount of cash I did not get. Stock has got increased. If stock has increased, my current asset has increased. I am going to subtract it. 39,900 difference here. 2,87,100 minus 2,47,100. And even the sundry debtors, 2,25,000 to 2,56,500, it has increased. That means payment has not been done to me. I have not received that much of cash. Debtors are in fact increasing. So I'll again subtract increase in sundry debtors. So from 7,83,000, add your 17,100, two positive figures added. Okay. Don't do this mistake in the exams. Huh? See that you are adding back positive figures and then you subtract. You will do 7,83,000 plus 17,000 and then subtract 39,900, 31. Only then you will get the right answer. That will be 7,28,700. From there I can pay my tax. Tax paid. Opening one, the current year will be provided, but the opening one is going to be paid. Previous year is paid. Previous year is paid. Current year is provided. If nothing is given, then we are going to current year will be provided, previous year. Minus tax paid, so I'm going to get 6,60,000. Cash flow from operating activities is done. Okay, now coming to the purchase of land and building, plant and machinery and furniture. Okay, now these accounts are important. Now if you see land and building, since they have given me depreciation as an adjustment, I have not passed any journal in this sum. We will directly do it. Land and building, since depreciation has been given to me, I have to make the ledger. Okay, so 6,90,000 openings, 11,70,000 closing. So two balance brought down, by balance carried forward. Depreciation is given to me, so I am going to say by depreciation 1,80,000. When I will close this, I will get the balancing figure. Since the credit side is more than the debit, I must have purchased it, right? 6,60,000 is purchase of land and building. This will go in my investment activity outflow. Same thing I'll do for plant and machinery. They have given me the balance opening and closing, 2,56,200, 4,20,000. Depreciation is also given to me. I'll just put the depreciation in my plant and machinery. The balancing figure will be my purchase. Obviously, if it is appearing on the debit side, credit side is more than your debit. Okay, so that means you have purchased it, no? So to bank, 3,13,800 will be your investment activities cash outflow. For furniture also same thing. You will write the opening and closing. Opening on the debit side, closing on the credit side. Depreciation is given. So your balancing figure will be your investment activity cash out. Okay. See this provision for tax account I have made. By balance, to balance. Given to me opening and closing. Right? You see there is a tax paid which we took 67,500. I'm just showing you all. Okay, you don't need to make this provision for tax. But 67,500 is the amount of I have paid for tax. So to bank, provision for tax account debit to bank. So your balance figure is your by P&L provision for tax. See, it is the same thing. 2,21,500. So for provision for tax and proposed dividend, always remember that your current years is kind of proposed, previous year will be always paid, and current year will get proposed or provision. Okay, so previous year I paid it, current years became the provision for provision. Now taking my cash flow from investment activities, purchase of land and building, it will be negative. Purchase of plant and machinery negative, purchase of negative. So there is a cash outflow from investment activity. 9,80,400. And financial activities, yes. All the financial related activities. Equity share capital has increased. So share capital, issue of shares by 1,50,000. Share premium has increased by 90,000. There was nil. From there I made it 90. So there is an increase in the share premium. There is an increase in the debentures account 2,10,000. That also increase will come here. Interest on debentures I had removed from my net profit. No, I had added back to my net profit. So from here I will have to subtract it 10,500. And for dividend, year, current year will be provided. The previous year will be paid. So previous year is 90,000. The dividend paid will be money going up. So 1,50,000 plus 90 plus 2,10,000. From there now subtract 10,500 for interest and 90,000 for dividend. You will get 3,49,500 positive. Okay, so 3,49,500 is positive. There is another positive figure. Yes. Plus 6,61,200. From there minus 9,80,400. You will get 30,003. Add back the cash and cash equivalent at the beginning of the year. Is it 1,02,600 given cash and bank? 1,02,600. I will add it. I'm getting 1,32,900 cash and cash equivalent at the end of the year. Verified. Right? So this sum is important. Some they can ask type of questions. Good for 7 marks. Now let's see the next question. From the following summary of bank account of X Limited, prepare cash flow statement for the year ended 31st March 2023. To balance brought down and by balance carried forward they have given. This is what? Bank account summary. In that they have debited issue of shares, receipts from customers, sale of fixed asset. Money must have come in. And money gone out, payment to suppliers, purchase of fixed asset, overhead, wages, income tax, dividend. They repaid a bank loan. So easy. Assume that the company does not have any other cash and cash equivalents and there were nil cash transactions. Okay. We are supposed to prepare what? Prepare cash flow statement. Cash flow statement in the books of X Limited. So we will start with cash flow from operating activities. They have directly given me. Cash received from customers 2,800 positive operating activity. Cash paid to the suppliers operating activity negative. Overhead expenses will be operating activity. Wages and salaries operating activity. Income tax also will go into operating activity. So cash receipts from customers plus 2,800. Cash paid suppliers negative. Overhead expenses negative. Wages and salaries negative. We get cash from operations minus income tax. You show it separately always. Income tax is how much? 250. But it forms a part of operations. So from 500, 250 is gone. 250 is cash flow from operating activity. Cash flow from investment activities. This is related, no? Investment activities. Purchase negative. Dividend will be finance related. Sale of fixed asset. Investment activity positive. Right? So cash flow from investment active, purchase of fixed assets negative, sale of fixed assets plus 100 will be plus, purchase will be outflow. So plus 100 minus 200 minus 100 will be cash outflow due to investment. And in case of financing, we have equity shares and we have dividend and we have repayment of bank loan. All this is related to my finance. So cash flow from finance activity, equity shares is issued. So I'm getting cash coming in. Repayment of loan will be cash going out and dividend also will be cash going out. So cash flow from financing activities is also 50 negative. Negative 50 negative 100 will be negative 150 plus 250 Net increase or decrease, which is net increase actually in our case. A plus B plus C, cash and cash equivalence is 100. Cash at the beginning of the year they have given me, opening balance 50, opening. This is closing. So opening balance is 50, I will add it. Arriving at 150, verified. Same 150 here. Okay, so yeah, in cash flow, this is one very good thing. Be able to understand what you have done is right or wrong most of the time. Now there is this June 2025 question, was a really big one. Let us read and understand. There's a lot of history, geography, but the sum is very simple. Ashna is a mechanical engineer from a premier institute based in Kolkata. After working for a decade in the engineering industry, Ashna completes a management development program from the school, from a top grade business school. Subsequently, Ashna, along with her 3 colleagues, sets up a venture capital fund, GKJ and Company. The aim is to invest in companies that manufacture, import, substitute. There is an impetus from the government to manufacture in India to meet domestic demand and for the world, and hence felt that any investment made in the manufacturing industry is likely to grow on an above average rate. GKJ and Company has raised an initial amount of 80 crores from the investment and is scouting for an initial development opportunity. One such opportunity investment is in Royden and Company. Royden and Company is a manufacturer of equipment and tools which are used in dental clinics. The equipment is essential as an import substitute and has potential to be exported as well. Balance sheet of Royden they have given me. Balance sheet in the financial year, rupees in lakhs, ending and beginning. Okay, opening and closing. Share capital 1400 to 1600 rupees in lakhs. Okay. Share premium 180 to 220. Retained earnings have gone from 476 and 60. Loan was not there, now it is there 400. Creditors 138, working capital. Outstanding salaries, working capital, and provision for taxes. In case of assets, plant and machinery has increased. Accumulated depreciation they have given me on the asset side, that is why they have given me in the negative form. Building, again accumulated depreciation on building. Land, stock working capital item, debtors working capital, prepaid expenses working capital, cash and cash equivalent, cash and bank, opening and closing total. Now there are certain details they have given. Plant was costing rupees 320 lakhs, on which there was an accumulated depreciation of 296, was sold during the year for 24 lakhs. Building which was acquired during the year costed 4 lakh 20. In addition to the cash payment of 20 lakhs, mortgage of 400 lakhs was raised for that balance. Dividend of 160 lakh was paid during the year. A sum of 278 lakhs were transferred for provision of taxation account. Royden and Company wants to set up a plant to manufacture advanced dentistry equipments. The said equipment is imported from USA. The Indian government is giving benefits in terms of tax holidays for such type of businesses. It is estimated that the turnover of rupees 800 lakhs could be generated at a profit in the first year of operation. The new business setup requires significant investments. Royden and Company have reached out to GKJ and Company for the first round of funding. GKJ and Company has requested Royden for some further information before investing, and Royden Company is requested prepare profitable projections under different scenarios, and these scenarios are given as follows. So the base case, they say that they will make 800 lakhs of revenue, having 60% of cost as variable, fixed cost will be 80, depreciation 100, and income tax they will pay 40 lakhs. In case of best case, that means if their sales are increasing by 37.5%, then their variable cost will become 56% of sales. Fixed cost, depreciation, and income tax, same tax rate as the base. In case of worst case, sales can decline by 25%. 65% of the sales will be variable, fixed cost depreciation, and same income tax rate as the base rate. Prepare cash flow statement indirect method of Royden Company for the current financial year with the available details. Calculate return on equity and return on assets of the Royden Company. Calculate profit under different scenarios. There are 2-3 chapters which they have mixed and they have asked. They're asking ratio analysis, they're asking financial statement interpretation and cash flow statement. 15 marks compulsory question. Okay, let us do this. First part, A. Now part A, before making any cash flow statement, let us understand the journal entry. Okay, I am passing the journal entry for this sum as a working note. You want, you may not pass, it's okay. First one is plant was costing 320. It had some depreciation of 296 lakhs. It was sold for 24 lakhs. So simple journal entry will be what? If I am getting money in due to sale, I am getting cash and cash equivalent 24 lakhs. Why? Because plant is going out 24 lakhs. On that same plant, there is a depreciation accumulated. So it has to be depreciation account debit. It is an expense to plant machinery. 296, 290. So this first journal entry is done in 2 forms. Cash and cash equivalent 24 lakhs. This is related to your investment activity, no? Positive. And this will go in my ledger. Depreciation also I will make a separate ledger. This also will go in my ledger. Next is my building. I had acquired a building costing 420 lakhs. So building coming in, building account debit 420. They are saying we did cash payment of 20 and balance we took a mortgage loan. So see, this mortgage loan is showing here 400. Right, this mortgage is here. And we have done cash payment also of 20. So again, this is related to what? Investment activities. Paying negative. This is mortgage loan. This will be related to your financial activity. Money coming in. And this will go in your ledger. Then we have done some payment of dividend. Dividend of 160 lakh was paid during the year. If I am paying dividend, dividend account debit to cash and cash equivalent. This will go in my financial activity negative. And this dividend, I will have to add it back to my net profit before tax, operating expense. Add it back. Okay, this we will see. It's like same thing like provision for tax, dividend paid. A sum of 278 lakhs was transferred to provision for tax account. Now from where will I transfer any sum? From P&L appropriation to provision for tax. Anything which I am left to after whatever profit I have left with, I will then do payment of dividend, then I will provide for tax, etc. So now for this I am going to make my ledgers. Whatever journal entry I am passing, especially my plant and machinery, building, P&L, everything I will make as a ledger. Okay. So see this. I have made a ledger for plant and machinery account. To balance and buy balance, I am going to take it from the opening and closing. Okay, so see this. Plant and machinery. Accumulated depreciation. Okay, opening and closing. So opening depreciation. Plant and machinery I am taking opening first. 1240 and closing is 1320. So opening and closing. Right? There is a plant and machinery which I have sold, for which I passed the journal entry. So this plant is going to move out, no? 24 lakhs. Also there was an accumulated depreciation on it. So buy depreciation of the plant sold, buy bank for sale of that plant 24 and 296. So now when I'll close my plant, all the journal entries are done, adjustments are done. The balance will be my purchase. This will go in my investment activity negative. Since I'm doing my plant and machinery, I'll do accumulated depreciation on my plant and machinery. Buy balance brought down, opening, to balance carried forward, closing. Depreciation is an expense. Credit the opening, debit the closing, right? 740 and 524. Then I did one depreciation over here, no, in the plant. If I have credited the plant, I will debit my depreciation account, depreciation on plant and machinery sold, lakh 96, 296 lakhs. So when I close my depreciation on plant, this will be my current year's depreciation on plant. I'll have to add this back to my net profit, right? This is going to be my depreciation for plant. Same thing for building. Building, opening 1900, closing at 2320. There is no sale purchase kind of any adjustment entry on this. So opening and closing, when I write, the balancing figure will be the purchase directly, because there are no other adjustments. Okay. Is there anything? Yeah. Okay. Building, there is an adjustment. Okay. Cash and cash equivalent and mortgage loan I have bought for 420. There is 420 coming, yes. It is coming as 420. Okay. So for that 420, though I paid some amount in cash. Okay. And I also have taken a mortgage loan. So there are two effects they are going to. For 20 lakhs, my money is going to go out, and for 400 lakhs, my money is going to come in. For building, this is investment account negative, it will go 420. But there will be another effect. No, for every journal entry, there are two effects. Okay, so negative this will go. But in case of financial activity, I will get no positive 400 also. Right? Now, accumulated depreciation on building, buy balance, opening, to balance, closing. So this will be the current year's depreciation on building 40. Will go add back to the net profit. Alright, now I have got this. I need to know my profit for the year. Now profit for the year, how will I come to know? How will I calculate net profit for the year? Okay. Before provision for tax and before dividend. Provision for tax, they have already given me the entire details on provision. Opening and closing they have given 20 and 20. So buy balance brought down 20, opening, balance carried forward 20. Okay. They have also told me that from the PNL provision was done of 278 lakhs. Right. So that will be by PNL provided 278 lakhs. So the balance will be what? Tax paid. Will go no in operating activities. At the end, I will subtract this amount of tax. Right. Then I have made a ledger of my retained earnings. They have given me retained earnings. Instead of PNL, they have given me retained earnings 616 and 476. So, buy balance brought down, opening, closing. 476 is opening, closing is 616, right? I have paid dividend of 160. From where will I pay dividend? This retained earnings is like your PNL only. PNL appropriation. You will get retained earnings when you have some profit left and you are putting it in your retained earnings. You are transferring it. So dividend also you must have paid it from there only. So your balance will be what? Your net profit after tax, PNL. So you can do this net profit after tax 300, add back the provision for tax, which is how much? 290, 78. Okay, so you are going to get this amount of net profit for the year before dividend and before provision. It will be 578, 300 plus 278. 278 is your provision for tax. You can write it separately also. Net profit 300, add back provision, you can write it. This is your net profit. Correct? Now, anything which is related to depreciation, I add back. Calculated depreciation on plant and building, I will add it back. I will arrive at operating cash flow from operating activity before working capital changes. Now, what are the working capital changes in my sum? Creditors, outstanding salary. Creditors have decreased. Outstanding salaries also have been decreased. That means I have paid my creditors and outstanding salaries have been paid. So, if there is a decrease in the outstanding salaries, I'll have to subtract. Decrease in the creditors also I'll have to subtract. So, from 138 has become 120. 18 and 12. Okay. From 40 it has become 20. So I am good. This is done. Provision for tax is done. Now this I am doing working capital. So 18 and 12 I will have to subtract. In case of my asset side, working capital related 3 items are there: stock, debtors and prepaid expense. Stock has decreased, asset has decreased. That means I must have sold it, got some money. So decrease in the stock, I will add it back. There is a decrease in happened in the debtors, means debtors have paid me money, I will add it back. Prepaid expenses have increased. Means prepaid expenses, that means money has gone out. Okay. So therefore subtract -2. So from 698, I will add 30 and I will subtract 30. Again I came at 698. Provision for tax, we had made a ledger. From there we got the tax paid amount. See, why did we make this provision for tax account? In order to understand how much is the tax paid. Opening, closing we did. Journal entry, adjustment we did. So the balance will be tax paid 270. So minus 270, I am going to get cash flow from operations after tax. Okay, after tax. Actually. So I start with the net profit for the year before dividend, before tax, before provision, everything. Alright. I am going to get tax paid. Lastly, I will deduct. Now cash flow from the investment activities. We have made ledgers. I told you in investment activities, have purchased a plant that I am going to write for 400 lakhs. So purchase of plant and machinery negative 400. We have also purchased the building. We have made a ledger negative 420. Then anything else is there? We have a land also. Land from 200 has become 240. Land. So there is a purchase of land does not depreciate. Therefore there is no depreciation. So again negative 40. And there was a sale of plant. Right? Sale of plant. Here. My ledger journal entries. There was a sale of plant, no, cash and cash equivalent to plant. Investment activity I will add. Remember this I had written. So that therefore I will add it back here in my investment activity. Add 24 to get 836 cash outflow from investment. Now cash flow from financing activities. In case of financing activities, I will see my share capital. From 1400 it has become 1600. So 200 is coming in of shares. There is a share premium also. From 180 it has become 220. So 40 again coming in, 40 lakhs. Then there is a mortgage loan here. There was no mortgage loan before, but now it is there for 400 lakhs. So it is going to come in here. It will be positive. It is coming in. Money is going to come in. And dividend paid will be money going out. Investment activity. We had passed the journal entry also for this. Dividend to cash and cash equivalent. From financial activity, I will subtract it. See, for dividend, I have already done, no, from retained earnings, I had added, no. Then only we got that net profit. So two effects are gone. One is negative, one is positive. So cash and cash equivalent. Cash flow from financial activities is positive 480. Then we have positive 428. 420 is 908 and minus 936 because it is an outflow. We are going to get net cash increase and decrease. Increase in the cash flow and cash equivalent is 72. Have they given me the opening? Yes, opening is given to me, 124. Add the opening, I'll get the closing 196. They given me the closing, yes. Verified. These sums are little, I know, a little bit tricky when it comes to how to find the net profit. Remember one thing, just pass the journal entries for this, any adjustments they have given, give them two effects. Definitely there has to be two effects. One of addition, one of subtraction. Make the respective ledger for the fixed assets only and provision for tax and PN. Once you have done that, you will automatically get it. Your net profit has to be profit before any kind of provision, before any kind of dividend paid, anything. Okay, so that profit when you will take it and then you will start making adjustments, you will arrive at operating profit. You have to make adjustments to those type of profit. Then the sum is very easy. Now they are asking me calculate return on equity and return on assets of Royden Company. Okay, so fine. We will just write the formula. Calculation for return on equity and return on assets. What is the formula for return on assets? I have done return on assets. Net profit after tax upon average of total assets. We know net profit after tax 300. Remember I had shown you earlier. It is how much? It is 300, no profit. You add the provisions and then it becomes 578. I have given you all like this because if in case you all happen to go and see the model answers of the institute, then they have solved it this way. Then you should not come back to me thinking that ma'am you have not done it. Even if I have not done and if I am doing it also, this is the same thing. Profit, how did I get? I got it with the help of my retained earnings amount. Na? Opening, closing dividends were paid. So my balance was my net profit after tax. Right? So 300 lakhs, this one, PNL appropriation or retained earnings account. From there I will get the net profit. So net profit after tax is 300. How much is my average of my total assets? It will be opening plus closing divided by 2. Total of assets is how much? 224 plus 312 total assets. So 254 plus 312 divided by 2, that will be 263. 300 divide that by 633 percentage 13 point. No, you're getting 11 divided by. Yes, it is 11.39. 11.39% return on total assets. Okay. Return on equity, net profit after tax upon average of total equity. Net profit after tax, I know it is 300. But of what is average of equity? Equity will be everything belonging to the shareholders, no? Shareholder items, equity, share capital, securities, premium, retained earnings. All this belong to the shareholders only. So all my shareholder items are going to become a part of my equity. And I'll have to take an average of it. So I have taken average means opening of equity is 1400, 180 and retained earnings. 1400 plus 180 retained earnings plus 476. 056. In closing 1600 to 20 plus 616. 436. Add that and take an average. Divide that by 2. You will get average. So return on equity will be net profit after tax upon average equity. If they would have not given me everything about opening and closing, I would have just taken the equity share capital and the securities premium, etc. Everything belonging to the shareholders item. So 300, divide that by 2246%, 13.36% approximately return on. And now the last thing they are telling, calculate profit in the different scenarios. Very easy. First take the base case. First solve the base case on one side, and then we will do the best case and worst case. Base case, what they are saying, revenue is 800 lakhs, right? Rupees in lakhs. Okay, don't forget all this. Working variable cost, they are saying it is 60%. So 800 into 60% will be 480. So what will be my contribution minus it? 20. Fixed cost, they have given it to me. Depreciation, they have given it to. Okay, and they have also given me income tax, which is 40 lakhs. Tax will be how much? 40. So I'm going profit after tax 100. Now this profit rate, I can find, sorry, the tax rate I can find. If I'm paying tax of 40 lakhs on a profit of 140, I removed my fixed cost, I removed my depreciation, I arrived at profit before tax. From that tax amount they have given me, I can find the rate tax amount upon the profit before tax. 40 divided by 140. How much percentage of tax I paid? 28.57. It is important for me to know this percentage. Why? Because they have told me that even in the best case and worst case, everything this remains the same. Okay, so this I have done. Now, in case of the best case, they are saying sales will rise higher by 37.5%. So 800 plus 37.5%. Your sales will now become 1100. They have given me the percentage of variable cost. So on 1100, take 50%. 16. Easy. You will get a contribution of 484. Fixed cost given to me 60. Depreciation given to me again 60. Oh, sorry, 100. These two are given. Tax rate we calculated, no, 28.57. So now 324. Just take 28.57%. 93. Approximately 92 point something you will get. So 231 is my profit after tax. In the worst case, there will be the decline of sales by 25. So when decline, so 800, I'll always take the base. Na? From 800, I am going to subtract 25%. Now I'll stand at 600 lakhs. 65% will be my, again, variable cost. So on 600, if I take 65, 390 will be my variable cost. My contribution will be 210. Fixed cost and depreciation again is given to me. So my profit is going to be only 10 lakhs. In 10 lakhs, if I put 28.5% as my tax, I'm going to get 3. So 7 will be my profit after tax. Rounded off to the nearest whole number. Okay, so we are done with preparing cash flow as indirect method, calculating return on equity and return on assets of Royden, and calculating profit under different. So quite a big sum. It was for June 2 to 2025. Okay, and it gives a lot of weightage of all these chapters which are important. Cash flow statement. Try to solve it more. If you all have seen my other videos in which I have solved cash flow statement, many sums I have done on indirect. So when you will start doing those sums for practice, you will get a hang of it, how to find the profit before tax for calculating the operating activities cash flow. So with this I have completed your cash flow statement. Stick to what we have done. Theory is not that very important for cash flow. Just you need to understand how to find investment, financing, and operating activities cash flow from the given information. Okay, they can ask you these small sums and make it a big question, or directly in indirect method. Okay, so see you all. Bye in my next class. You have any doubt? All right. So thank you so much for attending my class. If there is any queries, anything you all have not understood, you all can put it in the comment section and I will get back to you on it later. See you all. Bye.